You can avoid reality, but you cannot avoid the consequences of avoiding reality. When you tune in every day to chartingwealth.com and we review stocks, the ETFs that we track, all the stocks in the two indexes that we look at, the S&P 500, the NASDAQ 100, 20-year bonds, and gold, you are following with us reality. You are not avoiding it. You're not listening to news that gives you a spin, no matter how good or bad it might be. It is a replication potentially of reality, sometimes of fantasy and delusion. So why not cut through all that noise and join us for the signal? And what we're talking about is what's really going on, what we see in the stock charts, analyzing from the weekly down to the 2-day, down to the 4-hour, and see what's really happening and learn how to chart stocks. What does that do for you? If you were given the ability today as a master of stock charting, you would have virtually your own printing press. You would be able to look at the charts and see when something's going to go up and when it's going to go down. Now think about that kind of accurate knowledge. If you had that and you could follow trends, would you not have your own virtual money printing press? Well, my friends, I ask you to join us every day and see if you can't develop that skill. We talk about it, we teach it, we work on it every single day here. If you have the ability to visualize and see weekly vertical crossovers on the charts and jump in and do practice trades up and down. You might say, down, how do you make money buying something when it goes down? You don't. Either you get out of it or you buy the inverse of it. And with things like the S&P 500, there are inverse funds that actually short that fund and go up when it goes down. In fact, if you look at something like SH, which is the opposite of the S&P 500, it is the short. The S&P has been going down for the last 3 weeks. You look at SH and it has been going up, well, going into the third week of going up. And the S&P 500 going into the third week, it appears of going down. Folks, that's what we do here. We give you this information to see reality as it is, not as you want it to be, so that you have to deal with the consequences of avoiding reality. We want you to be ready, be able to see things, because there is coming a day when all of this is going to crash and crash hard. And when it does, we want you to know what to do. Now, let's jump into, we have this week starting off down. Now, we don't see things pushing through much further down than the prior week. In fact, we haven't even plumbed the depths of where it dropped to. We do see, however, the price percent oscillator heading toward that red signal line, and again, can't call any crossover going down until and unless it occurs. Derivative oscillators already looking negative. Now, this is on our weekly chart. So again, don't call anything until it actually happens, but does look like it's getting close. Now, it can bounce off that. We've seen it happen plenty of times before. Don't get over anxious. When we have weekly vertical crossovers, how long do they go on? Typically 4 weeks at a time. So there's plenty of time to get in and deal with that drop. We've not been in the market for a while, right? We have been out of the S&P 500 because we've not been writing this down. We saw it coming. That's why we pulled our trades, our successful, again, virtual trades. When I say virtual trade, I mean fake money. We have the ability to chart the stocks and to practice trade. We're not a stock calling service. We're an education firm, but we do see things starting off again decidedly weak. We go from the weekly chart, no pun intended there, between WEAK and WEEK. But we go to the 2-day chart and see we had a sideways slide going over the course. That past candle for Thursday and Friday was an up 2-day candle. We see for Monday, first day of this latest 2-day candle, a down candle, but it hasn't gotten to where the other candle on Wednesday bottomed. That was really Tuesday and Wednesday. It's still not down. I'm sorry, that would have been Friday and Monday, and then Tuesday and Wednesday. Those prior candles last week touching the week prior. So we see again Down movement, price percent oscillators heading down. Derivative oscillator lost a little bit of downward momentum. But again, we do see things starting the week off, trying to go down. Let's look at that 4-hour chart. And that's where we see, again, that sideways slide for about a day and a half or so, dropping off in the morning, about the same in the afternoon. Hasn't crossed over going down yet on the 4-hour chart, but the 2 days already in a confirmed down. We'll wait and see how things shake out. We have to have a weekly vertical crossover first before we can get into a sustained down move on the S&P 500, and that hasn't happened yet. It can't happen until the week is over. We don't draw weekly vertical crossovers until that candle is drawn on Friday, and a lot can happen between now and then. We've seen it before. That's the benefit of you all following us every day, because you see patterns and you understand what's going on and how things can bounce off the red signal line. Not saying that's going to happen, but it's possible. What do we see going on with the Qs? Very similar to the S&P 500. We see that, again, down movement starting the week off, but hasn't reached the level down that it did the prior, although the Qs, the whole candle itself, down a little further. And we are looking at the price percent oscillator getting close to crossing over, and the derivative oscillator's already negative. We go to the first day of this latest 2-day candle. It's a down candle, again, pushing lower than we saw on the prior S&P 500, where it hadn't pushed down to the levels that the 2 prior candles had, the one ending on Monday of last week and Wednesday of last week. It has pushed lower. And again, we'll keep an eye on things. Derivative oscillator gained some downward momentum. Price percent oscillator hiked over, going down at a steeper angle. We go to that 4-hour chart, and what we see there, of course, is more down movement in the morning and then pretty much the same in the afternoon. And things went down on Friday too. So we do have a crossover going down on the 4-hour chart, although the derivative oscillator hasn't gone negative yet. We'll keep our eye on things, again, waiting for it to sort out. Remember, we've been in sort of holding pattern here for many, many days, couple of weeks or so, waiting for things to shift out. And we'll see, again, perhaps by the end of the week, we will have crossovers going down, and we'll have some down moves that we can play. The Qs was down 1.69% for the day, the S&P 500 0.66%. Bonds were down also. Let's take a look at them, 0.21%. Now, as we look at the new week starting, we see a green up candle. And again, not pushing really higher than it had on the top wick on the prior week, but we do see a green open box candle. Derivative oscillator shows that weakness. The price percent oscillator shows that weakness. Derivative oscillator gaining some upward momentum, but some of that, the angle had been going up of the prior week, has been cut on the price percent oscillator. We go to the 2-day chart, and we of course see there flattening. We see that this latest 2-day candle is about where the wick's actually lower than the prior. It's just the first day, so we'll keep our eye on things. We're still moving up, so we'll see, but it is slowing a little bit. You can see that in the derivative oscillator and the price percent oscillator flattening. And we go to the 4-hour chart, and that's, of course, where you see that flattening. You see in the afternoon on Friday morning, things topping out and really sliding sideways, up a little in the morning on Monday, down on Monday afternoon. Price is still above the 2-day trend line, but crossed over in the morning, going down. So again, waiting for that pullback, if you recall, in 20-year bonds, to allow it to pull back and then look for a jumping in point heading up. So since we have both the 2-day and the weekly in confirmed up moves, we'll just wait and see what it is we have to see, and we'll see how things continue to move along throughout the course of the week. Now, we go back to the weekly chart, and we head to gold last. Gold down 0.01%, so again, that's 0.1%. We see that we started the week off with a red candle forming. Derivative oscillator still heading down about the same angle. Price percent oscillator still heading down about the same angle it had the week before. Derivative oscillator losing downward momentum. Why do I like to get those words confused between the DO and the PPO? Maybe oscillator is the one that's screwing me up there. When we look at the 2-day chart, we saw that the latest, the 2-day chart, the latest full one for Thursday and Friday, was a down candle with a long wick on the bottom. We have a large candle forming, not much of a wick on the bottom, and not getting to as low as things went on that prior 2-day candle ending on Friday. Derivative oscillator is losing momentum. Price percent oscillator is heading down, hasn't crossed over going down yet. If indeed it does, when it does, if that happens on the 2-day chart, then of course that would put us in the running to jump into a down move, since the weekly is still in a confirmed down move on gold. Gold closed the day at what, 120.64, somewhere along those lines, which again is, we're waiting to see, is it going to blow below the 119.50? And if it does, how much lower will it go? So we go to the 4-hour chart. What do we see there? We see in the 4-hour chart some up movement in the morning. Again, we've got 2 green up candles, but again, showing us the average pace is trying to move up, trying to bottom out, but again, down for the day just barely, 0.01%. We can see that price percent oscillator continuing to head down, though. Derivative oscillator losing some of that downward momentum. Still gained a little bit, but not at the same steep angle it had been trudging down. So we'll keep our eye on things and just see if that 2-day chart's going to flip over. And if it does, that gives us some momentum for further down moves in gold. Folks, that's where we are as we end the day on Monday. Again, let's keep our eye on stocks, see if they're going to continue to move down, and if we will have weekly vertical crossovers on the S&P 500 and or the NASDAQ 100, which would of course lead us to some wonderful trading opportunities. Remember, the biggest chart that we look at once every quarter is that S&P 500 quarterly chart, and it crossed over going down back in December. So you have that weight trying to push the market down. We'll keep that in the back of our minds. Now, if you haven't purchased our book, we have a lot of orders we are fulfilling today from folks, whether you're overseas or you're in the States. If you're in the States, follow the link in the show notes. You can buy our book, Charting Your Way to Wealth. I'll autograph it to you and get it out to you. If you live overseas, then please email us, cw@chartingwealth.com, and we will send you a PayPal invoice. Pay that. We'll get your book to you wherever you are in the world. We do not have digital copies available. This book is available in print only. That's the way we want it. That's the way we like it. We want you to have this spiral-bound edition so you can keep it open on your desk, see it, underline your favorite passages, write notes in there, you name it. There's something magical, I believe, about putting pen to paper, seeing stuff for real. When it's really in your hands, it's real, and we want you to feel the realness of it. And again, folks, remember that quote from today. You can avoid reality, but you cannot avoid the consequences of avoiding reality. Be in reality with us every day. Study these charts. Make sure that you practice every day, that you do the practice trades. We have trade worksheets for you, daily market worksheet and weekly market worksheets in the show notes. They're PDF files. You can print them out for free. You can also order a 3-month version of all those worksheets, spiral bound, that we will send to you. It's our Trader's Journal. We have those available for you also if you want them, but you can print them out on your own, and you can put them in your own scrapbook. You can bind them somehow, but whatever it is, you need to practice, and the more practice you do, the better. Now, we don't advise you spending more than 10 to 15 minutes a day, but you got to do it every day. You have questions, problems, concerns, write us, CW@Charting Wealth. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters. God bless.